on board. Do you want to go ahead and start off with a little bit of the context then, Tommy?
Sure. Our objectives here today are to talk about the key points and purpose of the Community Reinvestment Act. I'm going to take that on. And we're going to also identify performance standards that are used to determine the rating for financial institutions, and then talk about beyond compliance, how banks can work to provide capital in capital-starved markets and to have an adequate return while at the same time addressing some of the challenges that we have with access to capital in certain markets. So I don't know, Fred, is Norm on? Norm, are you there?
He's having trouble with his audio. So why don't we get started with the key points and the purpose of the CRA, and I can chime in and then I'll go into community engagement. And maybe by then, Bank of the West will give Norm enough time to get decent internet connection.
Okay, sounds like a plan. Let's start out with, the objective here is identifying opportunities for investment, lending, and community services for financial institutions. That's our objective this morning. The key here is to kind of understand what CRA is. It's been around since 1977. It was amended in 1990 and 1995 to add performance context rules. Essentially, what it says is not only are you saying what you're doing, but what is it that's actually doing? It requires insured depository institutions to consider the convenience and needs of deposit and credit services in the communities in which they do business. It states that insured depository institutions have a continuing and affirmative obligation to help meet the credit needs in their communities. It requires financial institution examiners to assess an institution's record in meeting the credit needs, including low and moderate income neighborhoods, consistent with the safe and sound operation of the institution. It requires examiners to consider this record when evaluating the institution to have any regulatory approval for opening a new branch, for closing branches, things of that nature. So it's really important that they actually do a good job. The CRA itself the act is several pages long. The regulation implemented is dozens of pages long. And actually, if you look at the CRA Q&A, which is an update, to give people an understanding of what qualifies. The regulation has been revised several times, and yesterday Norm did a great job. Hello, Norm.
Hello, sorry, had some problems.
That's okay. Is that it's currently going through some look at changing the regulation itself. It emphasizes the CRA regulation emphasizes performance over process. It defines what community development is, and it creates different exams for large banks and intermediate and small banks. It creates 3 different tests: lending, investment, and services for large banks, and adds new reporting requirements for small business, small farm, and community development loans. The ratings, essentially there's 4 of them: outstanding, satisfactory, needs to improve, or substantial non-compliance. When a financial institution applies for some regulatory approval, that record of CRA is taken into account. Comments on performance are concerned. By the way, that's one of the things from a nonprofit perspective that we talked about yesterday. There is advance notice for institutions that are going to be examined for CRA. And it's important for community-based institutions to comment on the institution's performance. And the impact on applications may be the basis for denial or conditional approval. The latest CRA regulation emphasizes performance, defines community development, and has a real important part of bank activity. The definition of community development is in 4 basic categories: affordable housing, that's rental or for sale to low and moderate income individuals; community or social services targeted to low and moderate income individuals; and activities that promote economic development. And the 4th one is activities that revitalize or stabilize low and moderate income communities. So it is really comprehensive. The definition of large banks is more than 2.5 billion in assets, and really has the evaluation is looking at the complexity and innovativeness of community development loans and investments, or the use of innovative or flexible lending practices. So it's very comprehensive. On the large bank exams, there are 3 basic tests: lending, investment, and services. Lending is half, 50% of the examination outcome. Investment is 25%, and services 25%. So the lending test is twice that for others. On the lending test, data that's examined include home mortgage applications and loans for the purpose of purchase, home improvement, or refinance, the financing of 1 to 4 family and multifamily properties, and owners of non-occupant properties. So it's really important to think about this in terms of its comprehensive. The small and intermediate is really at small and business and small farm loans, loan size of $1 million or less, customers with $1 million or less in annual revenues, includes commercial and commercial real estate loans. The community development loans that would count in the lending test must meet the definition. And last but not least, reporting any consumer loans is optional, it's not required. The factors really include the amount of lending and the bank's assessment area, the geographic distribution of these loans inside and outside the bank's assessment area. In other words, more than half of the loans must be inside the bank's assessment area. The number of and amount of lending and low and moderate income, middle and upper income parts of the assessment area. The borrower characteristics, as we talked about, family income, as well as businesses with less than $1 million in revenues also evaluated. For community development loans, this is on the performance side of things. The number and amount are examined, plus the complexity and innovativeness. In other words, if it's just straight forward, it's counts as a number or a dollar amount, but the complexity and innovativeness of that obligation are really add or enhance the value that's given to that. Overall, the bank's lending record of innovative or flexible lending practices that benefit low and moderate income people or geographies is examined. The investment test, it's new, not really new, but it's really qualified investments, one whose purpose meets the definition of community development, and it's a lawful investment. In other words, sometimes you have to get approval for that kind of investment. Could be a deposit, could be a membership share, or a grant. Deposit meaning institutions that want to do this can make a deposit in a minority institution or an institution that's serving low and moderate income, or a CDFI can make a deposit as well. And also grants count as that. The investment test examples include equity investments and low-income rental housing programs, and also the important part of this is the characteristic of the investment itself. So that's I just lost my screen. Hang on one second. takes just a second to load up here. There we go. And let's see, we left off here with on the service test, which is the next one. Well, let me tell you, other examples of investment include investments in CDFIs, investments in SBICs or small business investment corporations, the new markets tax credit program also. Then we get into the service. So we've got lending, investment, now service. Many times a loan or investment is not yet possible. They may lend their expertise to get that done. Activities include the locations of branches, office hours, ATM availability, the range of services provided at branches, and board memberships by institutional representatives that provide a financial guidance or things of that nature. Examiners look for an even distribution of branches, ATMs, and services across different income geographies of a bank's assessment area, or an explanation of how low and moderate income markets are being served. So in essence, what I'm saying is to use this information as a nonprofit or as a financial institution is really understanding what the community needs are, understand what the bank involvement or community partners can provide access to, like investments and loans or service test qualifying activities. And that's really the end of it. So asset side threshold we talked about, and there is a new test called not new, but this small and intermediate small bank tests as well. Basically, it's the same test as for small banks. The reasonableness of average loan to deposit ratio, which is another important threshold, the assessment area concentration, geographic distribution, borrower distribution, and review of any complaints. On the community development test, there's no separate test for investments and services, but examiners will also analyze the community development activities within the bank. So public files, really important, latest CRA performance and evaluation. You can get that on the website. HMDA, of course, the Home Mortgage Disclosure Act, and also what their assessment area is. So it's important. The conclusion is really the community development purpose is important. Safety and soundness is first. The key to success in the rating is the partnership between the financial institution and the local community. And CRA credit, in effect, is the icing. It's not the cake. And that's sort of the conclusion here in terms of the CRA. All right, moving on. Norm, I think, are you up, or Horacio?
I think I'm next. Thank you, Tom.
Okay. All right.
Yeah, thank you for the introduction. I just want to put things into kind of a simple to understand bucket here. With regard to the revisions of the Community Reinvestment Act back in the mid-1990s, you sort of had a situation prior to that with the 12 assessment factors that were alphabetically named, like assessment factor A, B, C, and so on. It was very process oriented. So to a certain degree, assessment factor A wanted to assess whether or not financial institutions were making an effort to understand their market. And now there were a variety of different subcategories to that, including who did you talk to, how many meetings did you have, what kind of outreach did you engage in? There are other assessment factors that looked at marketing, which kind of tied to that initial assessment factor of understanding your market, and then what did you do to sort of reach out to it. But what was missing in that initial round of regulatory rules was a little bit of the rubber meets the road, which is how much capital is going out the bank into those communities. So what happened in the mid-90s when Bill Clinton showed up and he said, well, I want it to be a little bit more outcome oriented. So as opposed to asking how many nonprofit leaders a banker took out to lunch, let's actually focus on how much money got out into the street for home mortgages, for small businesses, small farm, other types of lending activity that Tommy had presented, and Norm will probably talk a little bit about. So it went from one bookend, which was real process oriented, to another, which is at the end of the day, the proof is in the pudding. So let's take a look at where you lent to and who you lent to. And as a result, kind of like the eyes got taken off of the ball with regard to understanding the market. So it became much more of what we call a volume play. How many loans were you able to make in a particular community? And it almost didn't matter whether or not you knew what the heck was happening in that community, whether or not they needed small business loans or whether or not they needed mortgages. You just kind of threw all this stuff into the community, knowing that I have a certain number I need to reach in order to pass the test, pass the CRA test. So it got to a point over the course of the last decade or two where you could ace the test and not do a damn thing to help the community as a result. So you have all these banks that are getting outstanding and satisfactory ratings, and all these communities that are suffering just as much as they were beforehand. So clearly, even the regulators understood that. You don't have to be an advocacy organization like the Woodstock Institute to kind of come to that blinding flash of the obvious. So somewhere you need to be able to connect those two. That idea of understanding the market and then actually saying, now you understand the market, what are their needs, which is the middle part, and how did you satisfy those needs? That's the other bookend. So something had to connect these two bookends, and that middle part is, so what are you going to do about it? And that, I think, is part of probably what Norm and others are talking about with regard to CRA reform. Here in Illinois, we just recently were able to write and pass a state CRA. And we're in the process of building out the framework of what that state regulatory rules look like. And we're including that in it because of the lessons that we've learned from the federal CRA. So credit unions and mortgage companies and state chartered banks, we can't touch national banks because the OCC gave them this, get out of jail free card called federal preemption. But so states have no say over what national banks do within those states to a certain degree. But at least with everybody else, we're going to try to marry those two bookends. But there's a lot of work associated with doing that kind of knowing your market, trying to figure out what they need, and then delivering it. So that's a little bit about what I'm going to spend the next few minutes talking about. So we're trying to marry those two into the best of both worlds. So I'm going to divide what I talk about with regard to community engagement into two buckets. One is internal for the banks. The other one is external for outside of the bank. So on the internal piece, you kind of start off with socioeconomic information. So I'm actually going to share my screen here and show you a little bit about what I did, maybe by way of background in case those of you who haven't read the bio. I ran Community Reinvestment at two large financial institutions, one Japanese and one Dutch. I guess I just wasn't meant to do this for the Americans, but I found the Dutch to be socially progressive, but cheap. And I found the Japanese to be socially conservative and even more cheap. So I have not had the blessing of being able to work for a bank like Bank of the West with Norm, where he gets all the money in the world from the French. But he can probably tell you stories about that separately. But I am going to share with you some of what I have done in the past. So let's start with the socioeconomic information here. Let me share my screen. There we go. So right off the bat, so this is for the Dutch financial institution that I work with, Rabobank. It's primarily the world's largest food and ag bank. We competed a lot with Bank of the West, but they just doesn't have the chops to keep up with the Dutch. So for each market here, so just for kicks and giggles, I had decided to do something close to Joe Serrano's market, who I see on the panel here. Merced, California, just outside of the Bay Area, part of the Central Valley. Usually part of what they call flyover country in California. There is actually flyover country in California, and most of that is called the Central Valley. So here we just started off by doing a little bit of socioeconomic analysis to understand each of our key markets. On the left hand, we sort of had the fast facts. So tell me a little bit about the market itself in terms of housing, population, its main economy. On the bottom right, you sort of see what the researchers did in terms of trying to come up with key community issues. Those are the issues that they felt are the ones that create the greatest strife or the greatest friction in that community really being able to thrive. And then everything after that is a combination of some of the information we would provide. So here are all the Rabobank branches in Merced, and then some of the data. We asked them to put it in a narrative and to be able to add value, not only to the bank, but to a lot of our clients. We never really talked about CRA. We actually created these and handed them out to a bunch of our clients, the chambers of commerces in Merced, just to be able to show that we're making an effort, at least an academic effort, to understand the market. And this actually was used as a variety of different conversations within the community itself, with mayors, housing people, small business, economic development agencies. So you see the effort that we put into that. And now, while you look at the top of the screen, it says 41 pages. A lot of that at the very bottom here, after all the maps and the narrative, is a lot of the data. This is the meat. Somebody was talking earlier about where do I get data? There's a lot of publicly available data. The challenge is that even organizations like the Consumer Financial Protection Bureau, that's supposed to get a lot of data out to the public, they don't make it easy to get that data out to the public. It's there, but honestly, you'd probably rather have root canal surgery than actually try to figure out how to download it, how to analyze it. Now, there are a variety of different organizations that can do that. And a lot of universities now have the ability to, not only use professors, but their indentured servants, also known as students, to be able to do a lot of this as project. So if you want somebody to be able to dive into a lot of data for you on certain markets, I would start either at a community college or your local university, who probably is already looking at a lot of this data for maybe similar or somewhat tangentially related issues. So this is kind of the very first step that a bank like Rabobank would take in making an effort to start understanding their market. Now, there's another step we took as well. So let me have some fun with this, take this off and share my screen again. This one's even more fun to watch. There you go. So everybody sees my beautiful mapping system. Now, I had the University of California, Davis create this for me. It really wasn't that expensive. I think most financial institutions should be able to do something like this. But in terms of understanding a market, why do we want to understand a market from a banking perspective? Well, when we make decisions upon the allocation of capital for a small business, a commercial real estate deal, any kind of infrastructure, finance, mortgage, real estate, whatever, we underwrite to data, except when it comes to CRA stuff for the most part. We kind of take everybody's word for granted, saying that if you don't fund my nonprofit that focuses on, I don't know, left-handed albino artists, horrible things are going to happen to my community. And as bankers, for the most part, we don't really have the data to try to figure out, well, where does that interest fall into the continuum of needs within that community? Tell me, what are the top 3 or 5 issues that that community is suffering from that's preventing it from being a thriving economy? And then I, as a financial institution, can underwrite my decisions based upon that information. So again, I started with our economic analysis of Merced. I'm gonna, here, I faded it out so everybody can see Merced. On the left-hand side, this is a map that uses socioeconomic information as it relates to people. And you'll see it's dated. After I left Rabobank to go work at MUFG Union Bank, UC Davis stopped updating the information because I stopped paying them to. So that, was a little bit of a bummer, but this is a good example of what can be done. So on this side, you have data regarding people. On this side, you have data regarding place. And I worked with a lot of advocacy organizations and researchers to try to figure out whether or not we could combine these 2 sets of data, but then it gets too noisy. It's hard to figure out exactly what's going on. So we had to kind of separate issues in community with regard to people and place. So then what we did is red being bad, green being good. We just ended up using a lot of math to try to figure out what are those particular issues. So taking a look at Merced and kind of drilling down a little bit here, I can see, let's look for something that's green and something that's red in the same market. Okay, right here, this is a census tract. It's green in terms of people. Interesting. Okay, so let's find out why. Oh, not bad. Mobility and transportation isn't bad. Housing isn't bad. The economy doesn't suck. Civic life, not too bad. A little bit of negative on education and environment. I want to kind of dig into that. But if you take a look at that same census tract over here, it's red. Well, what's up with that? From a place perspective, this place is suffering. From a people perspective, not so much. So let's find out why. Oh, geez. Okay, still housing is good because we saw housing being good over here, right? But look at this, health and the environment, education. So the one that seems to be the biggest one from a regression analysis perspective seems to be health and environment. So I'm going to click on this. Now, all of a sudden, this whole area is going to be health and environment data. And let's find out specifically what's going on. Ooh, food desert, access to supermarket. Prenatal care, that's interesting. Prenatal care is also an issue. All right, well, let's take a look here with regard to people on this side. And it goes from green to yellow. So we know people, from the people perspective, the health and environment isn't all that great. And here, once again, you see an issue with regard to birth to teens and infant health. Well, that actually ties pretty well with prenatal care. But from a banking perspective, what do I have to do with prenatal care, birth to teens, and infant health? Well, not a whole heck of a lot, unless somebody has an idea that they want to finance a healthcare clinic. In a low and moderate income community, I can finance and do a deal to be able to provide a loan, either construction, whatever it is, for a healthcare clinic. So maybe I want to go out, meet some people, find out whether or not anybody's thinking about doing that. Or if there is one, do they need to be bigger? Do they need to expand? Are there issues surrounding that? So in terms of the provision of financial services, basically getting involved in health and human services does not count for CRA, and it's not in the business of banking. So you don't necessarily want to go to a bank and ask them to do something that isn't related to a bank, even though it's important in the community. But here, with regard to access to a supermarket, a food desert, once again, probably not something that a financial institution can do. But I will tell you something that I started in 2013 because of this exact issue. Rabobank, being the world's largest food and ag bank, we bank most supermarket chains. So Safeway, Jewel-Osco, that chain is one of our bigger ones. We also bank Whole Foods, a variety of different large supermarkets. So with this information, in one of the meetings that I had with one of our supermarket chains that was looking to expand in California, I showed them this information. And as a result, an Albertsons was going to be opening up not far from the census tract because I showed them there's a food desert, which to them means there's demand. So right off the bat, it's a low and moderate income community, there's demand, and I can tie in a client and do some of the financing associated with it if they need it to be able to build that supermarket in that area. So again, internally, we do the socioeconomic analysis. We map it out. We understand what the priorities are in the market. And now we have to validate it. Now, this could be either good or bad, kind of like, I'm not sure if any of you guys remember the Dave Chappelle show. He used to have a skit called When Keeping It Real Goes Bad. Sometimes when you want to take this data, you want to go out into the community and you want to use it, you can either do it right or wrong. The wrong way to do it is showing up and telling people what the problems in their community are. That's not going to end well, ever. The right way to do it is to get the leaders of nonprofit organizations, housing organizations, small business, the local chamber, other leaders from that community, bring them together, usually over food. They show up if you're going to feed them. And you sit down and you present this information, turn around to them and say, is this right? Is there context? Does this resonate? Now, granted, if you talk to a housing person, the biggest issues are always going to be housing. If you talk to a small business organization, the biggest issues in the community are going to be small business. But what you want to do is to be able to get the additional context to be able to understand, is there more behind the numbers that I may not know? And then you from there can create a prioritization of what you want to focus on in that community that fits within your ability to be able to provide financial services and products that are going to address that need. And now it's measurable. Go back to that map, you have something that's red or yellow. Now you have a 3-year goal. on this particular issue that's related to financial services that I have a budget to address or products to be able to use to address. Over the course of the next 3 years, I want this to move from red to yellow. And trust me, when I presented that to regulators like the OCC, here's the beginning of our CRA exam cycle, and these markets were the ones that we were going to focus on within each assessment area. These were the issues. Now look at that. In a majority of them, I've been able to move it from red to yellow or from yellow to green. And immediately that got a lot of buy-in from the community level and even from the regulatory agencies saying, wow, we can actually measure success and why you're doing this. Now, on the external side, instead of doing that in terms of doing that community outreach, there's another piece that's really important for financial institutions to do and for nonprofit leaders like many of you to understand. It is up to the financial institution to sit down with organizational leaders like you to make sure you understand their business model. Because a lot of what you may think needs to be done in the community may not align with the business model of the bank. And by business model of the bank, I'm not talking about being a rapacious capitalist. I'm talking about really what it is that they're good at. So similar to restaurants, not all restaurants are created the same. Like I'm in the restaurant business. Well, there's Italian restaurants, there's Chinese restaurants, there's Thai, there's Mexican. Similarly, when you say I'm in the banking business, there are tons of different banks. I'm a mortgage bank. I'm a small business bank. I'm an ag bank. I mean, I like to bank rich people. I like to bank, it's like a certain particular ethnic minority. In Los Angeles, there are a lot of Asian focused financial institutions. Now, that's a little bit dicey because there are some rules around that, but still, there are a lot of different types of financial institutions. As such, when you're talking to a banker, if they don't bring it up, you should bring this up. What kind of a bank are you? Because if you have an idea to be able to bring to them something that you think the community needs, or if they're talking to you about what they want to do in the community, you need to put it into context. If you're selling pot stickers, you're not going to get very far if you're trying to sell it to a guy that runs a pizzeria. Same idea. If you have a housing idea and you go to a financial institution who's primarily a business bank, you're not going to get very far. And it's not an issue of you not having a good idea. It's an issue of really making sure you know not only your market, but the banks that are providing what specific products in that market for what area. So between them doing that outreach saying, do you agree with our research? What more can you tell me about this market? The other piece that they have to do is saying, and this is a part of it that we can address. And now as a result, they can then translate that into, if this is a part we can address, this is a part of CRA that relates to us. And now they're ready to talk to nonprofit organizations about, now that we've funneled a big market and a big industry down into something much more manageable, you can have a constructive conversation about what to do, where, and how it's going to help. So with that, I'm going to take your questions at the end. I'm going to hand things over to Norm to get into a little bit of the weeds. So thank you all for your attention.
Great. Norm, you're on next.
Okay, fantastic. Can you hear me okay?
Yes, you're on.
Okay, great. Well, thank you. Appreciate the opportunity to share a bit with you today. And thank you, Lisa, and my fellow panelists for inviting me. I took a peek at the participants, and it's great to see an old colleague of mine from the OCC, Norma Polanco-Boyd. It's good to see you, Norma. Thanks for being here today as well. I'm going to talk a little bit about CRA performance standards. And let me pull up a presentation. We're going to look at this and talk about performance standards a bit. And then we'll have some time at the end to answer any and all questions that folks may have. Just give me 1 second to make sure my duplicate slides are working and everything is fine. Okay, great. So I hope everyone can see the presentation. So far, so good?
Yeah, looks good.
And, good. Horatio had mentioned the evolution of CRA during the Clinton administration. And I often thought if there was a Mount Rushmore, for CRA, you'd have, obviously, Bill Clinton would be on that Mount Rushmore. Jimmy Carter would be on that Mount Rushmore. and I am betting that our current president, Joe Biden, will be on that Mount Rushmore too. So we'll see. Okay, CRA performance standards. I wanted to just talk a little bit about some of the experiences I've had with managing CRA programs for over 25 years. I've been with 3 institutions over my career, 2 national banks, OCC regulated, and 1 FDIC. I was blessed to be able to bring outstanding ratings to each of those institutions. And so I'm just going to give you a few tips and thoughts on CRA performance management. If you're a banker, some of this will be probably a good refresher. If you're a nonprofit, it hopefully gives you some insight in terms of how banks see themselves in terms of CRA performance and how the regulators see them as well. I'm not going to talk too long. I want to have a lot of time for questions, so hang on to the questions. We'll get to those in just a few minutes here. The first important thing to think about when we talk about CRA performance management is that it is all about the results. Okay, we have to do certain efforts to get those results, but the bottom line is results are what matter. And what is the impact that those results have had on our underserved communities? At the end of the day, that's what it's all about. And so on lending, we all know about our HMDA lending and HMDA lending analysis. We should be pretty well heeled in that at this point in the game. If you're using tools like CRA Wiz, you've got lots of analysis reports and standard reports that you can run with the HMDA data. What I would want to encourage people is to remember that when the aggregate data comes out, I always like to refresh my senior management with what does that aggregate data telling us as an industry and as a country, and then boil it down into our specific CRA assessment areas. So it is a chance to refresh with some updated information. I'd also say that we know there's going to be some more census data. Depending on when your exam cycle falls, you may be having census data covering 2 different census periods, and that'll also have an impact in your analysis and examination. So I think that's important to keep in mind. CRA small business data, again, this is some BAU standard analysis. We should be pretty well heeled in this at this point in the game. Community development lending. This is a point that I like to emphasize, especially when I talk to smaller banks, is that it's really important to have a good objective benchmark to measure your community development lending and community development investment performance to tie it to. Tier 1, I've used that in the past. Average total assets is another good benchmark, average total securities. But it's really important, and I think that we shouldn't just rely on kind of the simplistic approach. This is how much we did the last exam. I'm going to do the same amount this exam cycle. That doesn't take into account growth in assets, and you might find yourself short of your goal of if you use that kind of simple methodology. I just mentioned about the investments, kind of pinning that to some objective measurements there. Tier 1, average total assets. Investments are a bit different because your CRA investment portfolio will constantly appreciate over time. So you want to continue to fill that portfolio with new current period investments. Those are the most impactful investments. So I always try and get a good balance of prior period and current period investments. My preference is to get more current period investments in prior period. And then lastly, on the service test, obviously there's a branch distribution report. It's a kind of a PE-based report showing our branch distribution across our assessment areas and also full scope and limited scope areas. We've created something called a branch parity report, which allows us to have a deep dive view in each of our CRA assessment areas. This is really important because as institutions continue to optimize their retail branch network, understanding the CRA and the fair lending impact of those branch closures is crucial. So the parity report allows us to look deeply into a specific geography and looking at that throughout the assessment, the CRA examination cycle, to determine, as we go forward with optimization strategies, what impact will this have in the market and what impact will this have in underserved communities. But I can't emphasize that point enough. That is really important from both a CRA and a fair lending perspective. And then lastly, community development services are kind of BAU standard reporting for our community development service hours specifically. Volunteerism is a really hallmark at Bank of the West. And we had to develop our systems to look at community development services multiple different ways. There's a top of the house view with the commitment for the exam cycle of CRA volunteer hours, but also there's an assessment area view, how many hours are committed to in a specific assessment area. And then there's also a line of business view. So how many hours are committed from retail in a specific assessment area. So it's a multi-layered approach that we've taken to track and report those service hours, but it's very, very important to us and important to the communities that we serve. Obviously, COVID has put a big wrench in the person-to-person opportunities, but we've gone virtual and I think we've been very successful with that.
Yeah, it's also, Norm, it's also the service provided. What is it that the activity actually provided in terms of financial support, but understanding financing and helping to overview or view the financial performance of the organization? Those are also important characteristics.
Yep, absolutely, Tommy. Thank you for emphasizing that. Yeah, we want to make sure that the activities qualify, and we've got a really good track record of making sure that we do that, and that our data is kind of sanitized and has the appropriate quality controls to ensure that it meets the test. So just a couple minutes on enhanced performance management, just a couple tips. The first one is adjusting your thresholds. Once you receive that CRA performance evaluation, it's time to refine and enhance your scorecards. We received our CRA performance evaluation the first quarter of this year. We received the first outstanding rating at Bank of the West. We're very proud of that achievement. And it was an honor to work with a great team and to have an organization that really supports this work deeply. But we can't rest on our laurels. So we immediately took the exam report and disaggregated the data, looked at full scope, limited scope areas, looked at the results, really looked at the examiner conclusions and saw how the examiner conclusions aligned with our reporting systems. And in some cases, they weren't aligned closely enough. So we were able to make appropriate adjustments and make sure that our thresholds were as aligned as possible with the conclusions in the exam report. Then we socialized the increased thresholds with our business units, because that's also something that is very, very important. Before you get to that executive committee meeting or before you get to that board meeting, make sure you socialize all of this work with the impacted business units to make sure there's not something that we're missing, not something that we haven't thought of. And I think you'll find that you'll be much more successful when you take that type of an approach. So adjusting the thresholds is very, very important. Let me turn to that. There we go. Okay. Yeah. The next kind of enhanced performance I just want to mention quickly is new metrics. Okay, new metrics. So again, CRA is really a journey with every institution, and we always want to move onward and upward with our programs and our performance. We become more mature with this work, and along that journey, I've found that I want to go beyond just the standard metrics, and I really want to design metrics that are able to align performance with behavior, also that can help drive strategy and also track success. So I may not be able to get everything I want from a canned report off of a system great system, but I need more than that. So we've developed metrics that are actionable. You know, it's a very clear metric that you can tell when things are going right and wrong. Metrics that have a very common interpretation. You know, people know what this thing means. Metrics that are transparent and simple and easy to calculate. And they're really accessible with simple and easy data. So I'll give you an example of a metric. We were trying to build more action at our branch level around mortgage lending. So we wanted to assign goals for branches on mortgage loan production. Well, we found that having a closed-end mortgage goal was a good, obviously, metric to monitor, but we found also that a better metric to monitor was the number of applications that the branch was taking and how many of those applications were being pulled through to make loan originations at the end of the day. So just a thought that, you know, keep in mind new metrics and new ways to look at the performance, specifically around building accountability, I think is really important. And then really, I think this is going to be the last kind of key performance management highlight I want to talk about right now, but you've got to be ready for change. You have to be ready for change because change is upon us right now. Tommy had mentioned we're on the precipice of CRA modernization happening, knock on wood, finally, after all this time. But beyond that, our performance analysis and reporting systems have to be dynamic. You know, we should be able to respond to those what-if scenarios. I can recall I was working with our mortgage lending team, and they were considering making an adjustment to a portfolio product. And they said, we want to raise the credit scores to, you know, 650 or 680. And they said, what impact will raising the credit scores have on our 2020 LMI CRA performance? And, you know, you've got to be able to not take the whole weekend to figure that out. You should be able to have your system so dynamic that it can answer those questions quickly so that you can show even more value to your business unit partners. And then another point I think is important is there are some amazing new data visualization tools, newer tools out there. And my goal is always to be able to create an interactive experience for my business partners and colleagues and our external partners. So we're constantly updating Tableau. We're using Microsoft BI as well. But I would encourage everyone to make sure that you use the best data visualization tools and systems you can, because that really speaks volumes to the story you're trying to tell behind your data. And then the last point on being ready for change is just be prepared, start preparing now. Before the end of the year, you know, really look at your systems, think about modernization, do some stress test scenarios with what you know is out there now for modernization and see what you can do. And also you got to think about Dodd-Frank 1071 because that's going to be here soon as well. Last, I found this and I thought this was just kind of cool to share, but the difference between raw data and the stories that data can tell. Data, big mess, it's sorted, it's arranged individually, but explained with a story. So make sure that your CRA data tells an outstanding story.
And Norm, I think this also applies to community-based institutions in order to be able to share, if you will, the story, if you will, of what that community-based institution is facing in terms of challenges for investments and loans and customer development. So it applies not only to the banking institutions, but also to the community-based institutions, because in order to tell the story, sometimes the data, the raw data, doesn't really give you enough emphasis, enough oomph to be able to move the dial. Is that right, Norm?
I agree with you completely. And so I encourage all of my partners, more data is better. and overshare with me so that I can then discern what the ultimate story will be. So thanks for sharing that, Tommy.
Yep.
Okay, so we're coming up on an hour right now. So thank you, gentlemen. But we've got some great questions. And since we started a little bit late, I thought we could go a little over. Our next session isn't until 12:15. So first question I see is from James Yeagley. Can you speak to how the CRA team interacts with the different business units within the bank, particularly in regards to specific loan or investment opportunities?
Sure. I could just jump on that real quick. So first of all, that is a really, really important question. And the CRA group should have a direct line of sight within executive management of the bank and within the board. So some form or fashion, there should be a board CRA Fair Lending Committee. There should be an executive CRA Fair Lending Committee. And we started a Community Reinvestment Leadership Council. Community Reinvestment Leadership Council. That's one level below the executives, and it's a group that normally doesn't mix, but they're there for the purpose of CRA strategy and execution. So there's finance, there's marketing, there's retail, and it's the folks I like to think of that really do the work. So creating that infrastructure is really important. We meet every other month, so it's not too onerous, and I would really encourage folks to think about something like that. In between those meetings, you have your more direct connections with each line of business and the individual in charge of diverse markets, micro lending, those types of things. But that's a structure that's worked well for us.
So there's
I think, go ahead, Rachel.
So there's, it's like each institution is a little bit different on this. The natural inclination of a lot of folks that have goals for mortgage or goals for business or goals for other type of lending and investment activity is CRA is a pain, that they're going to lose money, that it's going to take time. So the challenge for a lot of CRA teams is first and foremost to overcome that obstacle. Secondly, to build trust over years so that way the business line people at the local level can understand the value and then also the stickiness of those relationships, because sometimes it's not just a loan or the investment, but are there other opportunities to be able to provide banking services to the nonprofit or to the individuals involved? And then third, and this is a little bit of the unfortunate evolution of the financial industry, there are fewer and fewer people at the local level. So whereas a lot of financial institutions have CRA officers or, not CRA officers, but community affairs or CRA people working in each of their major markets, now those individuals are overseeing a lot of different markets. So there are fewer people on the street. And as a result, it's harder for them to find out about those specific deals. And secondly, it's also harder for them to know their champion within the business line to talk to. Because sometimes if you go to the manager of mortgage and say, hey, I got a great idea for you, they're going to blow you off because of the fact that CRA loses money. I don't want to deal with it. It's going to be high maintenance and low margin sort of stuff. So building those local relationships is going to be really important in order for your local CRA people to be effective. And the final piece of that has to do with really the ability of a CRA team to be an advocate on behalf of the community within the financial institution. I'm sure Norm and others that have been in this role will probably agree that sometimes even executives and managers within the bank kind of view you askance. It's like, who do you really work for? Because sometimes you're advocating for the community against the bank, saying, just do it. It's the right thing to do. We're going to be fine. And other times you're advocating for the bank and the community, and they're looking at you as like, well, you're just a banker. You just want to make money off of our community. So there's that overlap that's going to be important. And the best way to be able to bridge that and overcome that barrier is for CRA officers to work very specifically with regard to the data they have, to go to the business line managers and say, here's how we compare to peer in this market with this product. I need more of this. So let's just say you're talking about small business loans. You've got your CRA people mapping out where your businesses are, how you compare to peer, by geography, by size of business. You're going to see where you're doing well. You're going to see where you match, and you're going to see those communities where you're lagging behind. And that's where you go out and you do engagement at the local level. You find those deals, and then you go to the business manager or the small business lending manager and say, this is a compliance mandate. Do it. We're at risk. That's going to overcome a lot of those sort of perception issues. If you say, this is a compliance mandate, either we do it or are in violation of the regulation.
And I think also, Horacio, one of the things that I did in my banking career in Michigan, Indiana, Ohio, Wisconsin, Illinois, is you have to give, especially if you're looking at point of contact, is on the retail side. It's important that the retail, the tellers, the personal bankers, the banking center managers, is that you have to give them a reason, right? So doing workshops to emphasize how this is important for their community, right? They live there. And so it's important that they understand that identifying and communicating where the credit demands and financial services demands are in their local community, I think is really important. Giving them a reason to do it.
Hey, David, you have a question?
Yeah, David's question is, he's interested in specific outcome data organized by zip code. How many CRA LMI focused down payment assistance programs are there? How many humans engage in these programs? And how many apply for mortgages, and how many closed from 2014 to 2019 in the city of Detroit? Because he's struggling trying to find accessible outcome reporting sources.
Wow.
And I would say that this has almost become a sort of a dark humor running joke in that aggregating outcomes information from CRA actors in markets that are disassociated with where those actors are headquartered seems to be a gargantuan lift. And Detroit's mortgage market, you had the greatest decline in the United States of African-American home ownership post-recession. You've got less than 20% of the single family market being sold on mortgages. And there's really, the missing gap in the data is the CRA actors who claim to be doing lots of things, but won't show their cards in a way that's organized that researchers can access. So I wanted to go back to this question about how do you begin doing that without, reverse engineering PDF files into university centers to do reports?
Yeah, I've heard that comment. I'm part of the National Community Reinvestment Coalition's Bankers Collaborative, and I've heard the struggles that advocates have to, especially around community development lending data, which isn't reported at that level of detail, to try and put this together in a way that makes cohesive sense across different institutions and geographies. Right now, there isn't a and all these. My views expressed here are only norms, not necessarily those of the bank that I work for. But there's not a national repository right now. That's something that in our modernization will really be given a lot of thought, because I agree it needs to be a lot easier to look at this and to be able to show impact and action and where the deserts are and how we can be more efficient with distribution. But it's tough right now. I'm just acknowledging, David, it's tough to do.
Yeah, David, I think you were referring to some of the data that Wayne State University did over the years in terms of mortgage data and applications and things of that nature, which was very, I think, informative. And I think if Wayne State, wanted to do something on a larger scale, maybe that's the time to begin to ask them that. The other is, looking to Norma and others from the regulators to see if there is some way in which they can capture that information.
Yeah,
sure. I sit on the Chicago branch's CRA advisory panel, and I'm working on a research project with the University of Michigan right now. We've mapped all the HMDA, all the city assessor data. We've got MISHDA data from the Housing Development Authority. And really there's these whispers of at least 2 dozen different programs through CRA mechanisms that don't have reasonable reporting standards that can be analyzed and assessed.
Yep.
So the Wayne State team has done great work. Detroit Future City's done great work, but ultimately we're trying to figure out, why, these sort of institutional, arguably systemic racism barriers to homeownership in the city of Detroit exist, and how to reconcile that with coordinated CRA approach to augmenting the ability for Detroiters to get mortgages at less than $100,000, which banks tend not to like to write anyway. So that's the sort of ecosystem that we're working in that is a tremendous disconnect with home office and the Federal Reserve.
Yeah, Dave, to your point, and this is actually something that's quite troublesome. I know that in the banks I worked at, we always felt that transparency was the best policy, but I also realized that that's not an industry standard. We're currently working with nonprofit organizations in St. Louis to be able to target a financial institution, a national bank that's purchasing another small bank. And we found obvious fair lending violations. We just finished, actually one of the reasons why I was a little bit late, we just finished having a conversation with the CFPB about this. But in some of those conversations we've been having with the bank, they're marketing their down payment assistance programs, and they're marketing this, that, and the other. So we're asking them, okay, well, you have a merger coming up. We're seeing clear fair lending violations. Show us how you're using these products. How much traction? What's the utilization rate? And the response is, we don't feel comfortable sharing that information. So you have a complete inability to be able to do anything other than, oh, the OCC is going to give them CRA credit for having a down payment assistance program. On the other hand, out of 851 applications in the St. Louis market, 16 of them went to Black people. So who are you marketing to? Who's using the down payment assistance? And when we ask those questions, they're like, well, we don't really feel comfortable giving you that information. So then if the OCC isn't doing their job, then it puts us in the situation of having to do it for them, but we can't get the data. So we're hoping through transparency, outreach, media, that we can try to force something to kind of come to the middle. If the OCC or the Fed or the FDIC aren't asking these questions, advocacy organizations that have to fundraise to keep their doors open shouldn't be stepping in and doing their job for them. And financial institutions should really be much more willing to be transparent about the programs that they're marketing as helping these communities. Proof is where the pudding is.
Oh, this is a great place to stop the conversation because we have another session coming up, but these are great questions, and I can see how that can be very helpful, and hopefully it's something that's going to be coming in the future. So thank you for those questions. Sorry we couldn't get to all the questions, but CRA is always a hot topic. And you can rewatch the replay. It'll be available for up to 90 days or to the end of the year. And I think all the speakers' contact information are available as well. So thank you, Norm. Thank you, Tommy. Thank you, Horatio.
Yeah, great conversation. Yep.
Great conversation. Our next one starts at approximately 4 minutes or 12:15.
Wow.
So yeah. So we're gonna close this one out and then we'll go pick it back up at 12:15. So thank you, everyone, and join the next session. Thank you. Bye.
Bye.